A debt ceiling deal and a great jobs report mean good things for the housing market. You're definitely going to want to watch this one. This is one of the most volatile housing news cycles that I've seen, probably the most in the past 20 plus years. And we're coming off another high after the end of last week. So as of Friday, looks like the debt ceiling deal is going to be signed by the president, which is good news. It's going to take that uncertainty out of the market that led to rates creeping up north of 7% prior to Memorial Day. We saw as soon as that debt ceiling verbal, and I'll call it a verbal because it was the Speaker of the House and the President saying, hey, we've got a deal, we're going to vote on it. As soon as that got agreed to, when the markets opened last Tuesday, we saw the 10-year yield come down from where it peaked at 3.85 down into the 3.65 range by the end of last week. And that caused rates to come back down. They were north of 7 on Friday before Memorial Day, and they're coming down into the high 6s now. So this is good news for affordability, and it's great news for home shoppers. So the uncertainty is eliminated, and by the way, there was a 0.0% chance, in my opinion, that there was no deal getting reached. So that's number one. Number two, on Friday, we had a great jobs report come out. 339,000 jobs got added in the month of May versus the Dow Jones projection of 190,000 new jobs. So that's obviously a major bump. We also saw earnings increase by 0.3%, which is in line with expectations, and it's 0.1% down annually. So we've seen annually earnings have gone up 4.3%. That's down 0.1% from where it was this time last year. So we're seeing some favorable news come out in regards to what the Fed's going to do next at their June meeting. We also saw unemployment jump up. It's 3.7% versus the 3.5% projection. I don't see that being good news for anybody. We do know the Fed wants unemployment to go up a little bit. So I don't really get that. I don't think that's good for the country, good for the economy. I'm just sharing the data from the jobs report and what the Federal Reserve has come out and said they want to do. Overall, pretty favorable jobs report, and we've got this debt ceiling deal. So here's my prediction, how this is going to affect home shoppers and home sellers. If you look at what the Federal Reserve is projected to do at their mid-June meeting, there is, as of the end of last week, a 70+% chance that rates do not get hiked for the first time in the last 10, 11 meetings. They've had 10 consecutive meetings where they hiked rates. It looks like the projections are right now a 70+% chance we don't see a rate hike. That would lead to stability in the market. I'm clear we're going to see rates continue to come down as the debt ceiling deal gets solidified. My hope is we see rates come back into the mid 6% range where they were before all that drama came up that we weren't going to reach a deal. We had both sides of the aisle posturing. That's all over with. If rates continue to come down and maybe they get into the low 6% range, if the Fed doesn't do anything at their mid-June meeting, we're going to see a monster second half of the year. It's going to create more affordability for home buyers. When rates go down, you can afford more home. That's good news for anyone watching that wants to buy a property. And I'm clear that may unlock inventory if we can get rates into that high 5 range or maybe low 6 range between now and the end of the year. So this is all good data. Let's hope it continues. Let's hope the news cycle continues. The data that we're seeing continues in this direction, and the Fed sticks with the 70% chance of not hiking rates because that's going to unlock inventory. More sellers come to the market because they're willing to buy at a 6% or 6.5% rate. They don't want 7 because 65% of people have a 4 or less as the first digit in their mortgage rate. So this is what we've been hoping would happen. It's a little later than a lot of people expected. And if inventory gets unlocked and buyers come out motivated by low 6% rates, if I'm thinking about a move and I'm a consumer, that's who we're talking to here, I'd be having conversations with agents now, making sure they, 1, understand everything I just broke down, 2, have a plan to find you properties and get your home sold, and 3, have the experience and the knowledge needed to win in this market.